Good day, crypto trader. Bitcoin tops $20,000 as stock futures rise, dollar rally stalls. Bitcoin firmed up early Tuesday, having remained rock steady during the recent crash of fiat currencies against the US dollar. The top cryptocurrency by market value rose over 5% to $20,350. Ether, the second largest cryptocurrency, rose 4% to $1,390. The uptick follows a period of uncanny resilience to turmoil in traditional markets. Bitcoin traded between $18,000 to $20,000 in the past 5 days, even as major fiat currencies like the British pound, Japanese yen, and Chinese yuan dropped sharply against the US dollar. The pound, in particular, fell to an all-time low of $1.035 on Monday as the government's plan to implement the biggest tax cuts in 50 years while boosting government borrowing and spending amid high inflation spooked investors. The Chinese yuan fell to 7 per dollar, the lowest since May 2020, triggering fears of a rout in global commodities. If that's not enough, the S&P 500, Wall Street's benchmark index, ended Monday at its lowest level of 2022, extending the past week's 4.5% slide. The Dow dropped more than 300 points on Monday, finishing in bear market territory. Bitcoin has historically moved more or less in lockstep with stocks. So, the cryptocurrency's latest resilience has raised hopes of its eventual evolution as a safe haven asset. However, it may be too early to conclude that the cryptocurrency has permanently decoupled from traditional markets. The S&P 500 futures rose 0.7% early Tuesday, perhaps helping Bitcoin cross above $20,000. The dollar index, which gauges the greenback's value against major currencies, fell 0.46% to 113.58. The US dollar is a megabubble, Charlie Morris, Chief Investment Officer at Bicoin Asset Management, said. The Fed is making a huge error by overdoing tightening. When they reverse, there will be a flood of money into Bitcoin and gold. Ethereum price eyes $1,450 as post-merge tax problems arise. Ethereum price shows a steady climb over the last 12 hours as a direct consequence of the sudden spike in Bitcoin price, which influences the whole crypto market. This run-up is likely going to continue a little higher, or at least until the big crypto decides to reverse and undo recent gains. Therefore, investors should keep a close eye on BTC for indications as to where the tide is heading. While ETH is performing relatively well, tax laws implemented 7 months ago are creeping up after the Ethereum blockchain successfully shifted from proof of work, POW, to proof of stake, POS, via the merge upgrade on September 15. After this massive migration, investors can now stake their ETH to earn interest. Yet these tax issues may limit gains. In the UK, for example, investors will be forced to book taxes on their earnings, although a majority of the population is not required to file returns. Apart from this, investors in the US are also going to face an issue if they have not sold their forked Ethereum POW tokens, ETHW, tokens. These tokens were airdropped to investors holding ETH before the merge upgrade and are eligible for tax in the US, as explained in a previous article. Ethereum price is in a tough spot. Ethereum price, meanwhile, has rallied 14% in the last 6 days and is facing a decision time. Is it going to now continue its uptrend, or is it ripe for a retracement? If anything, it is likely that big cousin crypto Bitcoin will have the final say because of the high correlation between Ethereum price and BTC. Bitcoin price has seen considerable inflation in its market value over the last 12 hours, and as it approaches a key chart resistance level is likely to retrace. The same can be said of Ethereum price, which is likely to experience a squeeze to the $1,423 resistance level before a retracement as well. Investors are advised to prepare, therefore, for a potential U-turn in Ethereum price either at the $1,423 hurdle or even before then at the current price. The resulting downswing could knock it to the $1,200 to $1,300 support area, where buyers will probably step in eyeing a deal and absorb the selling pressure. In a dire case, Ethereum price might even slide lower and retest the $1,080 support floor. Regardless of the high correlation, Ethereum price could also continue to head higher even if Bitcoin price simply stalls and consolidates for a while. In such a case, a flip of the $1,730 resistance level into a support floor will invalidate the bearish thesis. This development could potentially trigger Ethereum price to revisit the $2,000 psychological level. Ripple price cools off before preparing for its next 100% rally. XRP price shows an interesting development in the lower time frame that hints at a potential retracement. The higher time frame scenario also entertains the possibility of a deeper pullback after its recent explosive move. XRP price reveals two reasons for a pullback. XRP price shows a descending triangle formation on the 1-hour chart, as seen below. This development could result in a correction for the remittance token. The price action around this setup, when connected using trend lines, describes a descending triangle. Such patterns have a bearish bias, forecasting a 15% downswing to $0.386, obtained by measuring the distance between the first swing high and swing low and extrapolating it lower from the breakout point at $0.450. In many ways this short-term outlook makes sense, given the remittance token has rallied a whopping 74% in less than 8 days. Such an exponential move is often followed by investors booking profits, which results in a retracement. Fortunately for XRP price, the midpoint of the 74% rally at $0.449 is just below the breakout point and could slow bearish momentum. However, investors can still expect Ripple to dive further to the 61.8% Fibonacci retracement level at $0.423 or the subsequent barrier at $0.404. The bullish side of things. However, investors should ideally look at a slightly higher time frame scenario to confirm if XRP price is due to retrace. The chart below shows that XRP price bounced off the $0.331 range low before starting the 74% ascent that came close to retesting the $0.561 to $0.596 resistance area. Although profit-taking and deteriorating market conditions have knocked XRP price down by roughly 15%, things could escalate if the $0.464 support structure is breached. This development will push XRP price back into the $0.331 to $0.464 range. The daily demand zone, extending from $0.381 to $0.433, is a crucial foothold to stop this hemorrhaging if it ever occurs. The move down to there represents a 10% sell-off in XRP price, which is not too far off what the short-term outlook forecasts. Whilst investors need to be prepared for a pullback in the remittance token, the level of the daily demand zone could also be a good place to accumulate if price stabilizes and looks like it is reversing there. Despite bearish forecasts, investors should position themselves on the buy side and try to take advantage of the pullback to purchase XRP tokens at a discounted price. This development could see stabilization and accumulation, and could be followed by another explosive move up. Backing this outlook is the recent outlook of Ripple's chief counsel, Stuart Aldroti, regarding the ongoing lawsuit brought by the U.S. Securities and Commission, SEC, against Ripple. Aldroti claims the SEC is posturing and wasting time, delaying an inevitable win for Ripple Labs. If true, this could see XRP price begin a massive rally that could propel it from $0.464 to the resistance area, extending from $0.561 to $0.596. A flip of this hurdle could result in a sweep of the equal highs at $0.914, which would constitute a 100% run-up in total and is likely where the upside will be capped for the remittance token. On the other hand, if XRP price fails to sustain above the $0.561 to $0.596 demand zone, it will reveal a weakness among buyers and excessive sell-side pressure. In such a case, A daily candlestick close below the $0.384 support level will invalidate the bullish thesis for Ripple. This move could see XRP price drop to the range low at $0.331, where buyers may finally attempt a recovery rally. Luna falls sharply as Korean officials freeze Do Kwon's $27 million worth of Bitcoin. The Terra ecosystem collapse, which triggered losses across the board in the crypto market, brought its co-founder Do Kwon within the authorities' crosshair. With the case gradually intensifying, the investigation took a much more serious turn after Interpol issued a red notice in Do Kwon's name. Merely days after this development, Do Kwon has reportedly been linked to transferring assets worth almost $67 million. LFG. Not really. As per reports, on September 27, about 1,354 BTC, worth a little over $27.2 million, were frozen by the Korean prosecutors following Do Kwon's arrest warrant. A new account was created under the guise of Luna Foundation Guard on September 15, just a day after the arrest warrant was issued. Over the following 3 days, approximately 3,313 BTC, amounting to almost $67 million, were noted to be leaving this account and being transferred to 2 exchanges. About 1,354 BTC out of the total amount were sent to the crypto exchange KuCoin, which was immediately frozen at the request of the authorities. The remaining 1,959 BTC could not be frozen due to a lack of cooperation from the OKX exchange, which ignored the prosecutor's request. These bitcoins are expected to have moved to other platforms from the exchange. As reported by FX Street, not too long ago, Do Kwon could be seen defending his innocence on Twitter, claiming he wasn't on the run. However, according to a former Korean prosecutor, in a normal criminal investigation, if a large amount of money was moved from the suspect's account after the issuance of an arrest warrant, it is natural to conduct an intensive investigation with allegations of laundering and concealment. Luna's hits just keep on coming. After marking a good first half this month, Luna began slipping on the charts and invalidated more than 54% of all gains noted in the first 12 days. Falling from $5.90, Luna slid to trade at $2.50 at the time of writing, 7.04% below the opening price, registering another red candle after the above-mentioned development. For now, the immediate resistance lies at $3.10, a level that has been tested multiple times in the 4-hour time frame. But the lack of buying pressure observed on the Relative Strength Index, RSI, could act as a hindrance.